Welcome, Matt, and welcome everyone for joining us today. I see quite a few people online, and we really appreciate you guys coming to spend time with us here this morning. And with that, I'll turn it over to Kevin.
Hey, so it's Kevin Cohen from TechCrunch. Thank you, Kristen. Real excited to be here with you today. We have a special program today. As many of you know, we've been building bridges across the world. Last year, TechCrunch, working with the Italian government and the Mexican government, launched bridges between Italy and Texas, or Italy and Austin, and then Mexico and Austin, respectively. And then the Eurasia Foundation actually made it possible for us to build a bridge with Russia. And it's been exciting because we've been doing work in the Tumen area. Tumen is both a city and a state or a region. And real excited to have some of the programs that we're doing with the Venture Outfitter, this program that we meet weekly, is specifically for bridging those connections. And right now we have some real exciting work that's coming out of this type of work back and forth. We won't spend a lot of time talking about the startups, but there's been some really interesting science and technology. In fact, one of the companies that we've got connected in is taking on COVID-19 issue around the lungs called wet lung syndrome. And so we'll talk more about that, but I'm going to run through a couple of really quick slides just to set things in motion. And just as a reminder really quick, this program is going to be meeting weekly, and for our partners in Russia, and actually we're going to actually open this up to even wider. If there are other people, other entrepreneurs, given the situation that everyone's in the United States alone, with 26 million people that don't have jobs as of this last week, and then of course all around the world. Part of what we're going to start doing with this program, the weekly Venture Outfitter program, is making it available to entrepreneurs wide, because we want to go ahead and start serving an even wider audience. A lot of the focus has been about taking care of just basic issues that entrepreneurs have. But one of the most exciting things that started emerging with the cohort that we had from between Texas and Mexico was that we started having entrepreneurs working with each other from different regions of the world. And it created unique opportunities for partnerships. We'll talk more about that. But today I want to just make sure I do some house cleaning. We do have a number of other programs that will be simultaneously translated, especially for our partners in Russia. Our partners in Russia will be able to watch any of the classes that they want during and interact, every week. But these specific ones, which are listed at techcrunch.com/events, will specifically have simultaneous translation through the app that we all have for this. I want to remind everyone at the very beginning, we do have a Facebook group. You can look for, it's called the TechCrunch US-Russia Impact Bridge. One of the ways that we're publishing a lot of what's happening, and if you want to ask questions at any time, in the next few months, you can actually just hop into the group, and I have an active group of mentors and battle-hardened entrepreneurs that are there to support you. So please join us, ask any question. One of the reasons we chose Facebook is Facebook has at least some level of tools for translating between Russian and English automatically. I know it's not perfect, but it does support us through that whole process. And so take advantage of that. Look for this group. So like I mentioned a while ago, if you want to join us every week, especially for our Russian counterparts, this is available. But the truth is, in this week, me and the TechCrunch team decided that we're going to make Venture Outfitter free. We want to make sure that it's available to a number of different entrepreneurs. We're still going to have programs on top of that are still fee for service. But this program, because we think that it's a critical time to serve as many entrepreneurs as possible, because, hey guys, we need you to actually start building the jobs that are going to re-employ all the tens of millions of people around the world that just lost their jobs. If you have questions, you can send an email. It's to start@techcrunch.com. For our Russian counterparts, we do have 4 positions that we're going to be doing extra deep support of the entrepreneurs. Now, one of these 4 positions has been spoken for. So I have 3 other positions that if you're interested in getting a much more heavy type of interaction with our mentors, with myself, I'll be one of the entrepreneurs to be a part of this. Send us an email at start@techranch.com. And for these entrepreneurs as well, if you need to send it through, send it in Russian, that is okay. Send it to us. We'd like to make sure we're engaged. What we're looking for is companies that are ready to really do business across the bridge. And, the program is for helping entrepreneurs get to that position, but then especially for these 4 positions, we'd like to actually go more in depth with you. And if there's any other questions, you can just send an email to start@techranch.com and we can go from there. I'm now going to ask Cindy, our executive director of this program, of our nonprofit, to join us for a few minutes. And she's just going to go through, she's got 4 short slides to actually talk about the bridge and how the nonprofit called the Inter-American Education Consortium and TechRanch are working together in serving more entrepreneurs. With that, Cindy, go right ahead.
Hey guys, welcome to the call. Good morning, good evening. I just wanted to take a minute to let you guys know a little bit about what IAEC is doing and how we can work with you guys. Basically, we can help you guys to identify opportunities. What we'd really like to do, if you would go ahead and advance the slide, Kevin. So we're here to work with you guys. I want you guys to know that when you come across opportunities for grants or for funding, we can help you to organize those details, apply for the grants, and then also walk you through the entire process. And the next slide details a little bit more about how we're going to do that. Just let us know how we can help you. Again, we can take you from application through contracts and then the final reporting and closeouts on those grants and funding opportunities. And just know that we will be backing you up as a team. We've got several of us on the team that are here to help you guys with that. And on the next slide, let's see. So I just wanted to let you guys know too that it's okay if you don't have something in mind right now. Just keep your eyes open. And once you do have that, bring that to us and we will help you go through that. I know that sometimes there are going to be language barriers and we can help you to sift through the information and find out the right way to approach these opportunities. In the meantime, make sure that you are working on your pitches and your press kits so that you're ready to go when the opportunity comes up. And then lastly, the last slide is just a reminder of my email. Go ahead and email me with any questions that you might have. Sorry, the kitty over here is upset about the door being closed. But go ahead and email me with any questions that you might have. And know that when an email comes to me, I also have several of us team members that can pitch in to help with your questions as well. And that's about it. Thanks.
Thank you, Cindy. Yeah, it's real exciting to actually, as many of you know, that I've been building TechRanch for many years. Real excited that both on our for-profit team and our nonprofit team, we have quite strong players. In the past, it used to be, in fact, even some of the guys that were in the Mexican Bridge that I see online right now know that we had an extremely small team. And a lot of the emails got stuck in my mailbox, and I apologize about that. But now take advantage of the whole team, both on the for-profit and the nonprofit side. So let's switch to what today's program is all about. I want to tell you about Matt Cohen. Matt Cohen's been a friend of mine and a colleague for about 20 years now. The reason that I picked him to be the person to speak to this today about fundraising is I've seen him over the last 2 decades build all sorts of different types of businesses. Typically, there's a technology component. Typically, there's some type of, a lot of digital work. In fact, Matt is the guy who started, I think, some of the first web applications and certainly first websites in Texas. I forget the name of the paper, but the newspaper in Houston that he actually did this with.
The Houston Chronicle.
Yeah, the Houston Chronicle. So he's been doing this for quite a long time. He was a venture fellow for a venture fund here in town called G51 for many years as well. Well, venture fellows work with the venture partners to actually decide which deals pass and which deals don't. And, you know, a lot of times you would talk about some of the different elements about what he looked at. But one of the important things is in someone that I would want to learn from as an entrepreneur is someone who sat on both sides of the table, both of the entrepreneur side as well as the investor side. The key issue here is a lot of the times when, like in one of the specific examples, when I pitched for funding, the guys on the other side were just finance guys. You know, they had MBAs from some university, some impressive university, but they didn't really have the insight of what it's like to have entrepreneurial scar tissue. Whereas Matt has done this, you know, on both sides of the table. I've seen him like here and here, like all over the map from that standpoint. And I think he's going to tell us some of the stories about that.
Yeah,
But
yeah.
what's so important is to have him here today for like that.
Well, thank
Go
you.
ahead, Matt.
Yeah, thank you. So as Kevin said, we've had the pleasure of knowing each other and working together for quite a long time. I was there at the very beginning of Tech Ranch, and it's been fantastic to see it grow and expand, not just in Texas, but globally. Maybe I'll start with just kind of a brief, my own personal story. And hopefully that will help you figure out whether you should listen to what I have to say or not. You know, I started my career in computer science. I came to Texas from New York back in the 1980s to go to Rice University in Houston. Wound up getting my first job at the Houston Chronicle, the largest newspaper in Houston and one of the largest in the United States. I initially was in charge of a big IT reengineering project there. So I got to work with all different kinds of a very diverse business. And in particular, started to learn how people use IT at scale, build versus buy versus outsource. And then part of that involved connecting the newspaper up to the internet in 1990. I'd actually registered the world's first newspaper domain name in 1988. In fact, the way that you got a domain name in 1988 was you called up a woman at Stanford and you asked her nicely, and it was free. I launched the newspaper's website in 1994, one of the first newspaper websites in the world. Then moved to New York to the Hearst Corporation, which owns the Chronicle. And there I was the CTO for a newspaper industry joint venture involving a bunch of other newspaper companies, where I built one of the first ad networks, one of the first news search engines. Then after that, I had a consulting practice where I was essentially a CTO for hire, worked for a bunch of different companies, initially some of the partners in the joint venture, but eventually for a bunch of other companies around the country and overseas. Essentially sitting on companies' sides of the table when they were engaging outsourced vendors to build big internet projects. So I got a lot of exposure to a very wide variety of different businesses and how they interacted with digital technologies. Then I moved back to Texas about 20 years ago to Austin, wound up getting a gig at a small venture capital firm. While I was a consultant, a lot of what I did was I evaluated companies for acquisition from a technical perspective. And so I started doing that work for a small venture capital fund here in Austin. And then when one of the two partners went on maternity leave, they asked if I would come on for 6 months while she was gone. And then when she came back, they said, "This is going great, why don't you stay?" So I sort of became a venture capitalist by accident, which I highly recommend. Did that for a number of years, invested in very early stage companies. We were typically the very first investor, investing, anywhere from $250,000 to $1 million. Eventually I had an idea of my own, so I left and started my own company. And all my relationships and understanding of the funding ecosystem were incredibly helpful when it came to raising money for my own company. That company, I ran that company for about 10 years, eventually hired a CEO to come in and run the business. And the company actually was sold last year. And And in the meantime, I've been splitting my time between helping manage the Capital Factory Fund here in Austin, which is Texas's most active venture fund. We also do very, very early stage investing alongside larger investors, so we never are the lead investor. And then I split my time between that and consulting. My main client right now is Indeed, the job search engine. In another case of kind of good things coming around, the CEO of Indeed was previously the CEO of a startup, and I was an advisor to that startup. So I've been helping him out for the last couple of years. I also try to give back as much as I can. I'm a judge at a lot of business plan competitions and startup competitions. I do a lot of mentoring to startups. My own company was initially funded by angel investors. And then eventually we moved to venture capital. I know a ton of angel investors, work with them very extensively, also very familiar with alternate methods of financing. So hopefully, since I've been doing venture capital for over 20 years now, I started right before the dot-com bust in 1999. And then, so obviously was investing through that downturn, and then was on the entrepreneurial side during the downturn in 2008, 2009, now back on the venture side again for this downturn. But I have a lot that I've learned. Hopefully I can share some of that, and that's what we're here to talk about. We'd like for this to be very interactive. If you have questions, please post them. Well, Kevin and I will talk a little bit. I have some things to talk about, but really the reason we're here is to be helpful to you. So
so make it a point. Make it a point to you can easily use the questions. There's two different ways of submitting questions. Feel free during one of the things that Matt and I talked about in getting ready for this conversation is we're going to have a conversation, but we want you to be a part of that conversation. So as things come up, just go ahead and post questions into the chat, and we'll field them. And then Mikhail, who is listening through the Speakhouse app, will actually help us from the standpoint of if you type in Russian, that's okay. That way we'll actually we'll translate those and be able to service all the different types of questions. So Matt, one of the things that you actually talked about was all the different types of revenue and all the different types of funding and stuff like that. I think you were going to talk a little bit about that.
Yeah, so why don't I start by talking about the different ways that you can finance your business and sort of the advantages and disadvantages to each one. And I think
there's a lot of focus on venture capital and
I'll mention that, but I want to put that in context of when it's a good fit and when it's not a good fit. And particularly given the situation right now. So let me start by saying that historically, and in my own personal experience, economic downturns are the absolute best time to start a company. And there are actually two reasons for that. The first is that the only companies that will succeed during a downturn are the ones that meet a very, very real and pressing need for a meaningful number of customers. In other words, during a boom time, you can get away with an idea that is kind of marginal. During, you could think of a downturn as a pressure cooker that only allows the best companies to survive. And in fact, during a downturn, you probably are not going to start a business unless you're pretty confident that it's going to succeed. So those mechanisms tend to lead to fewer companies being started, but absolutely, and many of those companies failing. But the ones that do succeed tend to be the absolute most successful. So if you look historically, there's a very strong correlation between that. It just becomes it's a much tighter filter for businesses during a downturn. You might think of it as like evolutionary pressure is much stronger during an economic downturn. The second, so that's sort of the one point. The other is that is that your competition as a startup is typically big established companies. And big established companies tend to retrench during an economic downturn. They tend to focus on the core business. They tend to cut back new initiatives. They rarely launch new products and new programs. They're generally focused on protecting their existing business rather than expanding into a new business, which is typically where startups live and thrive. And so it means that you have more breathing room, more room to operate during a downturn because the big companies are not paying attention to you. And so, and then when things do pick up, there tends to be a round of acquisitions where the big established companies realize that they've fallen behind during the downturn and begin making acquisitions of the companies that have been innovating and have been growing and have been succeeding during the downturn. Maybe they weren't big enough to be noticeable while they were growing, but by the end of the downturn period, when the big companies do decide that they want to start innovating again, they often decide that it's easier and cheaper to buy smaller companies rather than to start from scratch. And I've seen that over and over. What it does mean, though, you have to be extremely careful about market validation during these kinds of times, right? Like, and in fact, there's a technique that I recommend that people use. I've used this. We came up with this at my own company, but I've used it over and over again with startups. And it's the idea of identifying your perfect customer. So what you do is you put together a list of 3 to 5 criteria that if somebody has all of those things, if they say yes to every one of those criteria, then they are a perfect customer. And so what you do is you come up with that list, 3 if you can, but no more than 5. And then you start talking to people and you ask them those 3 to 5 questions. Do you have these characteristics? And if they say yes to all of them, then you tell them about what you're doing. And if they are in fact a perfect customer, they should be extremely excited. That's the definition of a perfect customer, is that they immediately recognize what you have as something they need, and they've been waiting for it. They're thrilled to have it, and they're ready to go right away. If they don't, and so the nice thing about this exercise is that if you're right about these being the characteristics of the perfect customer, you will very rapidly find people who want your product or service desperately enough that they're willing to pay money for it or do business with you, depending on your business model, even during a downturn, when they're focused on just the most important stuff. If you can make it into their most important stuff, then clearly you've identified a real market. Now, whether it's big enough depends on your goals for the business. I heard the CEO of Netflix once say that he, in a talk, that he actually prefers small markets because they can support profitable, fast-growing businesses. The key is finding a market that is big enough to support the amount of growth that you want, but small enough to allow you to provide a really, really compelling market-leading service within that market. And then if you can do that, now you have enough of a business and a revenue stream that you can grow into adjacent markets if and when that makes sense, or you can just continue to serve that business profitably and continue to serve them better and better over time. And that's particularly important during a downturn, because the traditional way of doing a minimum viable product that is like barely good enough for people, that bar is much, much higher today. What I really, I've adopted an approach that I borrowed from a friend of mine named Jason Cohen, not a close relation, who is the founder of WP Engine, which some of you may know as the world's largest commercial WordPress hosting site. And what he says is what you want is not an MVP, you want what he calls an SLC, simple, lovable, and complete. So the idea is, as an early stage company, you don't have resources to do everything. What you really want to do is, you just don't have the resources to build that much of a product. So instead of reducing the feature set to try and go after a big market with a minimal feature set, pick a subset of that market that's big enough to support your business, at least initially, where you can meet their needs, and maybe if you never do anything else, you're still going to do well for them. That's the complete part. So it's all tied into making sure, really doubling down on market validation. And I highly recommend his blog, by the way. It's called asmartbear.com. And there are tons and tons of great stuff there. He's one of my favorite writers on entrepreneurship. So all that aside, let's talk about different sources of financing. So, ultimately, the reason to get financing at all is because the resources that are required to get your business to where it needs to be, whether that's a specific growth rate or profitability, depending on what you're trying to do, it's going to require more money than you have available. But before we talk about outside funding, let me talk, banks, angel investors, venture capitalists, other less common models. Let me talk about the two absolute best sources of capital. One of them is your own money. Bootstrapping, it constrains your resources, but it focuses you enormously. The biggest danger of outside capital is that in the bank, it looks like revenue. The second biggest danger is that it allows you to fool yourself into building, and allows you to build something that it turns out people don't actually want. The incredibly powerful thing about funding something yourself is that you have very limited money, which means you have to find something that's profitable, that has a real need relatively quickly. And it forces you to do the right thing that you should be doing anyway. So my first advice is, if at all possible, fund it yourself. Figure out, okay, here's how much money I have. Here's how much runway that allows me to get. And what is it that I absolutely need to figure out? Who can I find some perfect customers who want what I can build given my own personal resources? Now, not everybody's in the same situation. Some people have more resources than others. Some people, whether that's social capital, financial capital, some people are more able to do that than others. So the next step, and if you can do that, you absolutely should. Now, don't bankrupt yourself. You should always make sure that if it doesn't work out, that you can live to fight another day. So, be realistic about what you can set aside, what you can afford to invest in this venture. And most of you guys are already doing that. That leads us to the next best source of financing. It's really the absolute best source of funding, which is your customers. That, in fact, the mantra of the bootstrapping community here in Austin and probably elsewhere is demo, sell, build. Right? First thing is to identify the market and validate the market as well as you possibly can. If it turns out that your product or service has an enormous market potential, there's going to be a subset of that market that's actually willing to commit to payment or actually pay before the product even exists. This was something that I learned the very beginning of my career when I was at the Houston Chronicle. We had a piece of software that we absolutely were desperate for it to exist. We wanted to use, we needed a high-end piece of software to allow us to digitally create the advertising and layout of a newspaper. And the layout software was for like newsletters and magazines, but nothing that was really capable of producing hundreds of very large-sized pages every single day. And so we were so desperate for this software to exist. We were at an industry conference, and we found a vendor that was doing something vaguely similar. And we said, this is amazing. If you will adapt your software to what we need, we're going to pay for it. If you'll agree to that, we'll pay for half up front. In exchange for best possible pricing and to be able to sign a long-term deal with you. And we'll give you some of the money up front. And we were thrilled to be able to do it because we were really, really desperate for this software. And it might seem like something that seems impossible to get a big company or to get your customers to pay for something ahead of time. But it's in fact the absolute best way to know that you actually have a really good business opportunity. One of the other companies that I've been advising over the last few years, a company called CrateJoy, and they're software for managing subscription commerce boxes, like where you get, the beauty product of the month, the Japanese snack of the month, the wrestling fan product of the month, and they have thousands of these subscription boxes that they support on their platform. And when they launched, they had a huge waiting list, and they actually had somebody come to them and say, I will pay you $15,000 to let me go to the front of the waiting list. We're still paying the normal fees and everything. We just don't want to wait. And it turned out that this was a company that already had 10,000 subscribers to their subscription box, and their homemade systems were falling apart and failing, and they were losing money left and right. So they were desperate for this solution. And so that's what you're looking for during a downturn, is something that is so critical to somebody that even during this time when people are cutting things left and right, they're furloughing people, they're still willing to do it. And I recognize this is a really high bar. It may seem impossibly high, but that's where you need to be, right? Like, this is a time where only the best companies will survive, but they're going to do incredibly well. Even if you get to profitability, that allows you to continue to learn and grow. So, if you can get your core customer base and you're at least ramen profitable, if not really profitable, that lets you live to fight another day. And in many cases, once things start to pick up, things will pick up along with you. You'll have loyal customers and things will go along. So I would, during a downturn, I would absolutely focus on those two things.
But if you don't mind, say something about the notion of ramen profitable. I know what that is. Say more about what does ramen profitable mean?
So ramen profitable means it means that the business is making enough money to support you at a very, very minimal level, where maybe you're still eating into your savings, but your very, very basic expenses are being covered. The joke being that if you have roommates and you're eating ramen, you're not eating into your savings. Obviously, many people are not in that situation, but it shows that at least there's a core of a business there that has the potential to support some folks.
The concept that I like to use, and I like the idea of ramen profitable, because is sufficiency. If you're covering your needs sufficiently, maybe you're not having really fancy meals, but you're able to get by. That's one of the ways you can walk through the desert that we're in and have that to have that work out great. So thanks, Matt.
In fact, actually, the advice that all the investors that I know are giving right now to the companies that they've invested in is to reduce expenses wherever possible. Because really the only reason that most companies fail is they run out of money. And so if you can extend the time that it's going to take for you to run out of money, that gives you more time to figure it out. And don't wait until it's too late. A lot of entrepreneurs wait too long to stop. Like, one of the great things about being an entrepreneur is that you believe the impossible. That also is one of the worst things about being an entrepreneur, is that sometimes it actually is impossible. Like, you think the impossible is possible, but sometimes you're wrong. So you should proceed as if you're right, but always think about the fact that you might be wrong, and be optimistic with your team, with yourself, but be realistic with your family, with your finances, and with yourself at the same time. So, I mean, almost all of us are talented, otherwise we wouldn't be entrepreneurs. And the reality is we can always get a job if we need to. Maybe not all of us. Some of us are effectively unemployable at this point. But just really, like, pay attention to your runway. That's because once you're out of money, you're out of money. So let me talk about some of the other kinds of financing. But I would say really during a downturn, focus primarily on those two, and it'll become clear why that's the case when I talk about the others. So obviously, if you have a capital, if you have a physical hard asset related business that is likely to have collateral, then clearly traditional bank financing is an option. I won't go into that in depth because most of you are familiar with it. In many cases, you're going to be required to put up a personal guarantee. So you need to be extra careful with that kind of financing, and it's not going to be a good fit for many kinds of startups, but don't discount it. There are banks that specialize in working with startups, Silicon Valley Bank and Compass Bank in the United States in particular. So don't rule it out completely, but often it does make sense as an adjunct to other kinds of financing. So, you have a line of credit alongside your angel investing or your venture capital. In fact, most angel investors and VCs will have a relationship with a bank that they know well. And if they do provide funding for you, they can make it much easier for you to get a line of credit or a loan to go along with it to help give some additional leverage alongside the capital that you're raising. Probably the best place to start after that is with angel investors, right? An angel investor, is somebody who is, has personal wealth and wants to help entrepreneurs. Generally, if you're a wealthy person, you have lots of different choices for your money. You can invest in the stock market, you can invest in real estate. There are a lot of things that are actually pretty safe, relatively speaking, that you can invest your money in. The only reason why individual investors invest in startups is because they want to, and they really enjoy the relationship with the entrepreneur. And so the key there is understanding why angel investors are investing and presenting, first you have to find them. Second, you have to present your business in a way that they're going to understand and appreciate. Angel investors tend to, there's a spectrum, but they tend to rely very heavily on their trust networks. So the absolute best thing to do is to get an introduction to an angel investor from someone who they already trust. And this means it tends to give advantages to people who already have a lot of social capital. But even if you don't have a lot of social capital, if you're going to be selling your product or service, you're going to need to find a way to get introductions and get in to people who are busy anyway. So it's a good practice, and you're going to need to do it no matter what.
Wait, and let's say something about that, because one of the stories that Matt told us at the very beginning of his talk spoke about social capital. He said that he was working with one of his friends on this one startup, or he was consulting to this one startup, and then that person became CEO of a multi-billion-dollar company, called Indeed, in which then created an opportunity here. It's such a simple concept. And I think it's a very popular concept in Austin. Part of the idea about all these bridges is to create that across countries, where we have social capital among this group, right? That's why this is more of a community versus just like, a series of programs. So that notion of social capital, of, us knowing each other, and because there's a trust relationship, we can actually build things together. That's a really profound thing. Thanks for mentioning it, Matt.
Yeah, of course. I mean, in fact, a lot of research has shown that most people have a community that they're in, and that they mostly interact within that community. Some people are members of more than one community, and these are the bridges. These are the connectors. And the huge advantage of being a connector, and the reason why so many successful businesses are created by people who are connectors, is that they can apply a solution from one community to a problem in a different community.
We actually around the Tech Ranch are saying, let's solve local problems with global insight. That's exactly what Matt's pointing to.
And so a lot of it is about learning how to be lucky. One of the talks that I often do is about this specifically, and the very, very short version of it is that I'm not talking about, that I can roll better on dice than you can. Luck is about paying attention, being in a place where opportunities are, recognizing opportunities when you see them, and taking action when you do see them. And not surprisingly, you're much more likely to make a connection or get an opportunity at an event like this than you are, watching TV in your living room. In general, and this can be challenging for people who are introverted. Most of you probably aren't introverted if you're entrepreneurs, but plenty are. It's just good practice. In fact, right now is a particularly great time to reestablish connections with people, because it's just as easy to do a Zoom one-on-one with somebody who lives halfway across the world as it is someone who lives down the street. All of us have an extended network. It's a particularly great time to reconnect with people, both to see how you can help them and to see how they can help you. Even if they're not a customer, they may be able to give you an idea. They may be able to make you a connection. My favorite ask is, can you recommend one person who you think I should talk to? And maybe they don't have anyone, but it's generally a very reasonable ask to have them recommend one person, given my idea or given what I'm working on. Can you recommend one person you think I should talk to? And then you have a warm introduction. And then you do that again, and you do that again. And it turns out to be a technique that works really well. So even if, in terms of finding angel investors, that can work really well. It's probably the absolute best technique. Not surprisingly, people tend to be very protective of the people they know, especially if they're going to introduce them to someone who's going to ask them for money. And so you should bear in mind that people tend to be very hesitant about making introductions like that. So if instead of framing it as, can you recommend someone who can give me money? Instead ask, can you recommend someone who can give me advice, who's been successful in this field? And those also tend to be people who can give you money, but it's much easier to get an introduction for advice than it is for money. And you have to be careful when you have that conversation to frame it as advice. And then if it turns out that they think what you're doing is going to be incredibly successful, then they're naturally going to want to consider either giving you advice or assistance or make introductions for you. And if that goes well, then they're likely to want to invest money with the business. So people invest money where they have a relationship. So you have to start with building the relationship. Angel investors, like everyone in this category, are going to be far more conservative than they normally would. So in general, many will stop investing altogether for a couple of quarters, or they're going to raise their bar extremely high, which is fine because you shouldn't be doing it unless you set your own bar really, really high during this time period. And in fact, there's a positive feedback loop there, which means that during a downturn, during a boom time, it's quite easy to get these conversations that actually won't lead anywhere. Whereas now, people are much more likely to say, listen, I'm just not doing any investing right now. I'm really busy, focused on my own company. And you've got a much higher bar to even get a conversation, potentially, which means that if you do get one, it's good validation of your idea or of your business. So, treat this as a benefit, right? In a boom time, a lot of investors will talk to you and talk to you and talk to you and talk to you for weeks and weeks and months, and never actually say yes. You're a lot less likely for that to happen today. You're more likely to get to a no, which is actually what you need so that you can adapt you can go back and refine your questions about your criteria. If you're a perfect customer, you can refine your business. A quick no is far better than a long maybe, especially if it comes with a reason, right? And another thing that's really helpful working with angel investor is asking them to give you, making it easy for them to give you concrete feedback. Venture capitalists is an even higher bar, right? VCs are looking for companies that are going to be enormous rocket ships, even in this downturn. And so the bar has gotten even higher. It's already higher, right? Like when I started doing venture investing, we would typically talk to between 1 and 200 startups for every one investment we made. So just recognize that you're not just competing. It's not enough that your idea be a great one. It's that it be even better than all the other companies that these investors are talking to. And VCs have set themselves up. It helps to, sorry, Kevin, do you have a question?
Oh yeah, no, I was just one of the questions that came in. It was from Artem, and it's actually really related to what you asked. And
yeah, please.
Kristen translated it into English for me.
Yes, please.
And I just want to go ahead and ask it, just to because it's right in line with what you said. If Artem says, if a product is already very popular in another country, for example, in Russia, how should it be presented to investors from the USA? You're right on the edge of talking about that.
Yeah, that's a really good question. So, the biggest misconception about venture investors is that they really like risk. In fact, the opposite is the case. Everyone wants a sure thing. And investors are looking for as much of the risk to be taken out as they possibly can, so that they can be confident that the capital that they're putting in the company is going towards accelerating growth of something where the core business proposition has already been validated. So really the goal of all of these early stages of funding is first to convince yourself that it's something that's going to succeed, and second to convince an investor, and then second to convince employees that it's something that's going to succeed. One of the best strategies I've used is to try and hire the absolute best people I can, people who I didn't think I'd be able to get, and to use that as a way to validate my idea. Because if it's not an amazing idea, you're not going to be able to get people to leave good jobs and come work with you. But then if you can convince yourself, you can convince really good people to come work with you, then then it's going to make it easier to convince investors. So if you have an existing business in another country, think of this as very strong validation that the product or service can work in that market. So then your question is, put yourself in the investor's shoes. Imagine somebody came to you to Russia and said, I have this business that's working really great in the United States. How am I going to make it work in Russia? Well, really now you're no longer concerned that it can work at all. Your main concerns now are, what is it about this new market that might be a barrier to success? In what ways is this new market different from the market in which it's been successful? And really, really focus on having good answers to those questions. And if you don't have them yet, your investment in going into a new market should be in trying to answer those questions as quickly and as cheaply as possible. That way, you can come in and say, hey, investor, we have this very successful business in Russia, and we've done this pilot project in the United States where we rebranded it with an English name that we think might work better. We found a partner. We tried this very specific test, and it was an amazing success. That's when a VC is going to be incredibly interested. And you should be incredibly excited too, right? Like, convince yourself first. And it's all about understanding the differences in the market. Like, what is it that is transferable and what is it that might not be transferable? I would also, another thing, it would be to talk to other companies that have been successful in doing the similar market. So a forum like this is going to be an incredibly good opportunity for you to do that. So I guess that's what I would say.
There's two different things that I just want to make sure I referred to in kind of putting a nice little wrap around Artem's question for what Matt's saying. Lindsay just mentioned that in our previous program, Lindsay actually talked about some market validation techniques that are very complementary to what Matt's saying. We'll make sure that a link to those videos are available, and that has Russian translation in it as well, just so everyone knows that it complements what Matt's saying. And
So,
Artem, the other thing I was going to say that that you can look to for this program, given that you're in the Russian side of the program, is we will be helping. Like the other thing that might be interesting, if you already have the business successful in Russia, finding the right channel partner, the right channel partner here, the partner in country, can be very useful as well. Lindsay spoke about that in his program, and Matt spoke about that in a little bit earlier. He didn't use the words channel partner, but that's essentially the same thing. Finding the partner in the country to actually be successful there. Kristen just posted the link to that video of Lindsay's program into the chat, so you might check that for anyone that's interested. Go ahead, Matt. Yeah, I thought you might have something to say about how a Russian entrepreneur who's got success in his or her country could also leverage channels, because I know that you've had experience in that as well.
Yeah. So what you the like I said, if you think about the core challenge of entering a new market is understanding the differences between your current market and the new market, and trying to identify any barriers to that success. And so one of the ways to do that, of course, is to have someone in the market who's very familiar with it, or to put somebody embedded in the market. So the three models that seem to work well are to find somebody through a very strong connection that can work for you in the new market, or take someone from your existing business that either is interested or has an interest, has a particular relationship with the new market, and put them on the ground in the new market. And so a lot of people do that. But ultimately, if you can find a channel partner can be a high risk, high reward strategy. You have to be extremely careful to find a channel partner for whom your solution is extremely high priority. Most channel partners, by definition, they already have an existing business. And so if you can focus not on how they can help your business, but how you can help their business. And focus on getting a strong commitment from your channel partner. And that's going to be hard, right? Because they already have a business. So either a financial commitment or some sort of significant commitment, and that'll be your equivalent of getting someone to pay up front. And that allows you to validate the fact that your channel partner is in fact incredibly invested in the partnership. Because generally channel relationships take a long time, and more time and more money and more investment of focus than you think they will. And so you just have to be very cautious about it, but it can be an incredibly powerful thing if you do your due diligence and do your channel partner validation sufficiently. And do the same thing I said about your perfect customer. Put together your 3 to 5 criteria for a perfect channel partner, or even turn it around and say, what is it about them that would make you their perfect channel partner? And then just be relentless. Like, don't settle for 1 or 2 or even 10. Try to talk to 50 or 100, which seems ridiculous, but you want to make sure that you don't get lucky early on in somebody that seems good, or spend a ton of time talking to somebody who might be good. If you have a perfect partner, they're going to get it immediately, and they're going to want to move forward really fast, and they're not going to be afraid to make a commitment. So set your own bar really high, because the whole industry is setting their bar high right now.
We got another question
from
Igor.
please.
Yeah, Igor says, if our service or product didn't fire in one place, but could accidentally, take, let me try to interpret the question, because we did some back and forth,
Translation? Yes, please.
Back and forth questions privately. So my product didn't fire in, I didn't really, I took some investor money. I, got some traction, but I didn't get really good traction. He said the words, it didn't fire.
Yep.
should I give the money back, or should I try to go to this adjacent space? How do I make a decision based on that? Like, we didn't hit it in the market that we thought that we took the money from the investor on, but we want to go to this adjacent market. We think that there's something there. How would you actually deal with that? Because that's a sticky question.
So it depends on who you took the money from. If you took it from a bank, then, you know, as long as they have capital, you know, like they have their typical deal, and, you know, you're going to have to pay them back with interest, and you just decide. As long as they feel they're going to get paid back, they don't care. If you're talking about an angel investor, I would say your personal relationship with the investor is more important. So I would, you know, figure out what else you might want to do, and go back to your investors and say, hey, this thing that we set out to do, there were things we didn't know. We had hypotheses. We had an idea. We went out and we tried to prove it, and we have not yet been able to prove it. However, we have another idea that we think might be even better. Even if you don't legally have to give the money back, I found that in general, when you go and you talk to your own investors and say, I have this idea, so I'll give you two very quick stories about it. One is I did this myself. So our original idea didn't work out, and we actually spent most of the money. But we did identify a potentially useful alternative market, a pivot. So I went back to our investors and I said, hey, what do you think? Like, you know, I tried to sell the company, wasn't successful. And two of my investors gave me incredible advice. One was, who said, listen, Matt, I don't want 10 cents on the dollar. I want $10 on the dollar. Like, don't waste your time trying to get me a little bit of my money back. If you have a great idea, then pitch it. You already have my money. So you know, all you're getting is my advice, and my approval. So just tell me what the new idea is, and if I like it, I'll do it. My other investor, who's one of the wealthiest people in Austin, he actually was in charge of all products for Microsoft for a decade. He said, listen, I didn't invest in you for the return. Obviously, I'd love to get a good return. I was prepared to lose my money. All of our investors were big. All of us are big boys and girls. We knew what we were doing. If we couldn't afford to lose the money, we would have invested it. You should do this if you think it's the right thing. Like, if you want, you know, people say that time is money, but they're wrong, because you can always get more money. If you feel this is important enough, and that's my saying and my interpretation of what he said. But then what he actually said to me was, Matt, I invested in you because I believed in you. If you think this is the right thing to do, enough that you want to invest the next precious couple of years of your life, which you won't get back in this, then I'll go get my checkbook and I'll write you another check.
Say more about that, because I think Igor is sending me a couple of private messages, and I know you have you don't have to disclose the whole story, but I remember seeing you go through that story about you know, having to do almost like a restart on.
Yeah, absolutely. In fact, I'll go into that in a second, but I would briefly ask everyone to go look at the genesis of Twitter. Twitter was actually founded as a company to do podcasts. And they took on a bunch of money to do that. And then Apple released podcasts in iTunes. And they're like, okay, we're dead. Like, our current business has no chance now. However, we built this little tool internally to help us all keep up with what we're all doing. And we think this might be useful in general. So they went back to their investors and said, do you want your money back? And some of them took their money back and some of them didn't. And the ones that didn't take their money back are much happier now than the ones that did take their money back.
Wait, now if we'd run out of money on the first thing, but, you know, like, say we getting the podcast company going and we're just about to restart, how do you make the decision on if I should ask for the next tranche of cash if I'm at the end? Igor's question was then asking a little bit more about okay, should I ask for more money to go restart this whole other area?
Well,
like,
I mean, think of it, so you're sort of balanced between 2 points. On one end, you've got the idea that it's sunk cost, right? All that money that is spent is spent. And so there's no need to worry about that. Like everybody went in with their eyes open. You had some ideas that you know, some things you weren't sure about that you wanted to go see if they were true or not, and they turned out not to be true. You know, you all got into this together. You knew what you knew, and you didn't know what you didn't know. And, you know, you all made what was the best and most reasonable decision at the time, and it didn't work out. Happens all the time. The important thing is that everybody believes that you worked as hard as you could, you were honorable and ethical in the way that you pursued the opportunity, and that you actually believe that this is another opportunity as good or better than as the original one. And if you believe that, they invested in you the first time, then maybe they'll invest in you this time. Think of it as like a separate investment that you can justify in and of itself. And your existing investors already know you. So actually, you know, their risk is lower in investing in a known quantity. So in my case, we had already spent $3 million of people's money. Like we had some people where I'd spent $300,000 of their personal money, and it didn't work out. But they knew that it was a good idea, and that, you know, they understand why it didn't work out, and the new pivot they thought really was important, and that they're on the ground floor of this new business. So it could be Twitter. So don't be. Of course, no, you would all have preferred that the first version have worked out, but in fact, actually, the average number of failures, you probably know this, that a successful entrepreneur has is 3 before they're successful. And in fact, my friend Brett Hurt, who is one of the more successful entrepreneurs here in Austin, his successful company was his 7th startup. And so, you know, you don't know what you don't know, and you were all in it together. So, you know, if you want to go back to your investors, go back to your investors. They know you, you know them, and make a pitch. Like don't be ashamed that it failed. I mean, you all knew going in that it was likely to fail. You're a startup. Most startups fail. You were all in this together, and now, yeah, so just go back to your investors. If first convince yourself. If you convince yourself, then go back to your investors. Your investors don't want 10 cents on the dollar or a penny on the dollar. They want $10 on the dollar. And if you have an idea that you think can give them $10 on the dollar, then go to them with it. They know you already. And if you've behaved ethically and you've worked really hard on their behalf and it didn't work out, that's okay. Or if they're the kind of investors that you want to continue working with, it's going to be okay.
Let me interject a question there then. I've got a question here from Igor. Then I'm going to ask a question from Jetty. I know that I know it's 12:05 here. And
I'm happy to go a little bit over if other people are.
And so we've gone over just a little bit. So if you have another question, or
happy to
get it now, this is our last call for questions. But so Igor said, in your example, you had some type of good relationship with the investors. You know, you were friends with investors, it sounds like. Do you have to, is that the level of relationship it takes to have this type of ability to go back and forth for the, you know?
Not necessarily. I mean, ultimately, any investor is going to have some combination of financial returns and personal reward that in which they're doing it. The more financial they are, and venture capitalists and banks are much more financial than an individual investor, you know, essentially you're coming to them with, you know, as I would definitely recommend, you know, during the initial period, make sure you're communicating well and helping them understand the struggles that you've been having, and that these aren't failures in execution, they're failures in knowledge, right? Like you can't know the future. So it was a good decision at the time and it didn't work out. This happens all the time in business. So you know, if they're primarily a financial investor, then you come back to them with another financial proposition, right? You come back and say, you know, here's our plan. I don't have to get your permission, but I'd like to get your blessing. Or, you know, it's kind of up to you, right? When I went about this, I didn't have any money left, or we had almost no money left. So giving them their money back wasn't an option. But you know, they already do know you, and they did trust you enough at least to invest in you once. So
Let's use that as the basis for Jetty's question. Jetty said, "Is there a sweet spot you might observe in the terms of number of months left of runway that are conducive for bootstrap founders?" So whether it's investor back or bootstrap or whatever, Jetty's is specifically about I've only got this much money left for my runway. What should the number be before I decide, hey, I need to punch out? Do you have some rule of thumb about that?
So if at all possible, figure out where your line of desperation is and don't get to it. Right? And the reason is not just because you shouldn't put your own personal health and your family's security at risk if at all possible, but also once you're desperate, you start to make bad decisions. Anyone that might want to do business with you, an investor is going to want to see your financial situation. If they know things are desperate, then they're going to be less likely. So the absolute best time, do it in as far in advance as you possibly can. The absolute best time to raise money is when you don't need to. So the more you can present yourself as a company that doesn't need to raise money, the better off you're going to be. It's typically at least 3 months. You prefer to have 6. Generally at Capital Factor, we only invest where that round of financing is going to get you at least 12 months. And so, if at all possible, get yourself 6 to 12 months of runway. And if you have to make painful cuts now, it's better than laying everybody off later.
Let's ask a question then about that. Like I said, if there's any, I'm kind of doing my last call for questions. Before we let Matt kind of do a wrap and all that sort of stuff. What kind of deals do you want to see, given that you have this position with the Capital Factory Fund?
Yeah, of course. So,
what do you want to see?
So, I'll tell you a specific and then just sort of generally what I look for, right? So, in specific, Capital Factory invests in companies we know and can help, which generally means companies in Texas that have an existing investor. So we're never the first investor. We're generally the last investor in the first round. We try to help companies before we invest in them. And Capital Factory has a variety of programs that, many of which are complementary to the programs here at Tech Ranch. But in terms of, for the criteria for Capital Factory investment are, you must have a lead investor. The round has to be big enough to take you at least 12 months. It typically needs to be a $500,000 round or more. And we need to know you. And so that can mean that we just know you personally, we know people really strongly in common, or you've been a member of the community in Texas, and our primary presences are in Austin, Dallas, Houston, and San Antonio, but there's some connections elsewhere. But really, most investors primarily want to invest in companies that they can help, because otherwise they're just providing money. They want to be able to invest in companies that have a higher likelihood of success, not just because you invested, but because you invested versus somebody else. So that's Capital Factory in particular. In general, what I look at are where my feeling is that billion-dollar opportunities are created when the world has already changed, but most people don't know it yet. So if you can imagine your presentation that says, the world has already changed and here's why. Most people don't know it yet, and here's how we're going to take advantage of it. In general, virtually every multi-billion-dollar startup, they didn't create that market. That market happened because of something else that had already occurred. So just a very quick example, Indeed, which is the largest job site in the world, it became possible because enough people were on the internet that big companies started posting their jobs on their own websites instead of on job sites like monster.com, or in addition to it. And what that meant was that there was a critical mass of jobs that were only on the employer websites because they didn't want to pay Monster to put them on monster.com. What that meant is that there was now an opportunity for Indeed to index all of these jobs and create a single place where job seekers could find all the jobs in the world without having to pay, even jobs that aren't willing to pay Indeed. And then they used Google's monetization strategy of having the employers that were most desperate to hire to pay for placement on the search results. And so the key thing here to remember is that it would have been a complete failure if they'd done it 5 years before, because there just weren't enough jobs on employer websites to index, and Monster.com wouldn't let them index their jobs. It wouldn't have been any benefit to index Monster. They already had a search feature. So think about it that way. The companies that I look at are ones that say something about the world has already changed. And we know because we have this special, we've been in that industry, we just happened to across this opportunity. And because the world has already changed, there's this enormous opportunity that wasn't true 5 years ago. So anyway, that's I think probably the thing that I tend to look at. The things that I ask people are, what do you do? Why is that enormously important? Or why is that going to make a ton of money? Then the third question, which may be the most important, is why are you the one to do it? Or why is your team the ones to do it? It may be a good idea, but it's a good idea that someone else is going to be successful at. Some of you guys may remember a company called Friendster, which was the very first social network. It was the right idea. They were too early and they didn't execute on it very well. The third question is,
Facebook ate their lunch is essentially what Matt's saying.
Well, first MySpace ate their lunch, and then Facebook ate MySpace's lunch, because they were further along and they didn't make some of the same mistakes that Friendster did. Like the market was further along, more people were online than before. They went into the market with universities where there were already good relationships. And so, there were a lot of different reasons why one company is successful or another. But the question I often ask is why is it that you are going to be successful? Like, what is special about you? Have you done this before? And typically there are two answers. One is to convince me that you have the kind of background that is likely to be successful. You've been in this industry a long time, you have a whole bunch of connections, etc. The other reason why we think you're going to be successful, and this is the best reason, is that you're already being successful. So a great example of this kind of company is YouTube, right? They were a couple of entrepreneurs who had no background in this whatsoever, but they were adding 1 million users a month. So it really didn't matter what kind of background they had. They knew they were going to be successful because they were already successful. And those tend to be the companies that raise lots of money on really huge valuations. So you have to decide, is it social trust, social proof? Like, should you trust me because of my background and the fact that I'm a good bet for being successful in this space, whereas other people are not? Or is it that we're already successful enough that you should trust the proof that we've already gotten? And that's typically the route that most entrepreneurs take, right? So the reason to spend your own money to get proof is that nobody's going to give you money until you have proof. The reason to spend an angel investor's money on proof is that no VC is going to give you money until you get a little further along. And so it's all about removing risk. And then, so those are my fourth question is, how can I help you? Like, what are you asking me for? Are you asking for my time? Are you asking for my advice? Are you asking for my money? Are you asking for introductions to connections? What are you asking for? So if those are the four questions you need to answer. What do you do? Why is that incredibly important? Why you? And what do you need from me? And you can answer that question in one sentence, in one paragraph, in one slide, in 4 slides, in 4 hours. And you should have versions of all of those.
Let me ask you this, and then those are really good summation points. Let me ask: is there any last summation, Matt, that you'd like to share with our entrepreneurs today?
I would say that there's no learning without failure. That many companies will fail over the next months and years. And that doesn't mean that they were the wrong thing to do. That the bar has gotten raised really high, and the thing that was the right thing to do a year ago may no longer be the right thing to do. failure is how you learn. So don't treat it, a lot of cultures, a lot of backgrounds, a lot of communities treat failure as something bad about you. In fact, failure is just that an idea that you had didn't work out. That doesn't mean that you're somehow inferior or there's something wrong with you. Like it was the right thing to do at the time. Like if you're playing blackjack and the dealer has an ace and you have a 19, you need to take another card. You're probably going to bust, but it's still the right thing to do. And you shouldn't be ashamed of yourself you should never be ashamed of yourself for doing the right thing, even if it turned out later to be wrong. So I'd say that's probably the most important thing is the most important asset you have as an entrepreneur is belief in yourself. And don't allow hard times or failure to impact your belief in yourself. Your entrepreneurial spirit is what creates value.
Excellent.
So
Well,
that would
so
be the
let's
last
do
thing
this.
that I leave. To leave.
Yeah,
yourself.
what I'd like to do is let's do some I wrote down some of the points. I'm just going to sum over
please.
some of them just so we can do, and want to make sure that just as a reminder, since I know that there's other questions that are being asked and they're going to be asked. Just as a reminder, really quick, before we all go, we have a few more events. Just check the techrange.com events list. If you're interested in the Russian specific events, these are the ones that are going to be coming out. Make sure if you have follow-on questions for Matt or for the TechRanch team or for the community around, take advantage of the Facebook group.
Please post them. I'll go to the Facebook group and I'll do my best to answer as many of them as I can. Or find some common questions and answer them there. I wish I could answer more questions. And I'd like to either answer questions or help us answer each other's questions.
Exactly. And so do that, because especially over the next couple of days, we might be able to talk Matt into answering questions over the next 24 to 48 hours. So take advantage of that. So some of the points,
and connect with me on LinkedIn as well.
Yeah, perfect. Kristen, if you can, go ahead and post a link to Matt's LinkedIn in the chat. So just on some of the summation, just to review some of the things that I heard and learned. Ramen Profitable, making sure that you actually get to sustainability as soon as possible, personal sustainability. The second is connect to other entrepreneurs for your safety net. If something happens and if whatever you're working on fails, you can hop in with someone else. The third thing that I thought was really powerful, learning how to be lucky, learning how to actually set up the conditions so that you can actually take advantage of opportunities as they present themselves. Fourth thing, and the biggest message that I heard for an investor was use customer money. Don't worry about investor money as much. Use customer money.
You need customer money eventually anyway.
Yeah, you got it. Yeah, otherwise it's not a business, right? Sixth thing, get really good about recognizing opportunities. We're in a unique time in the history of any of our lives. And so recognizing opportunities, there's lots of opportunities right now, just about recognizing them. The seventh thing I heard was advice versus money. Sometimes instead of going to the investor to ask for money, go to the investor to ask for advice. Because if you start building up that relationship with advice, then at some point you're going to be ready to say, hey, I'd like to ask you for money. The next thing, ask for the quick no. A quick no is better than the long maybe. The long maybe might kill you. The next one was reminder that Twitter was a podcast company and then Apple stepped into their space. Twitter just pivoted and found something quite interesting. That was an interesting story that I didn't know myself. Next thing, what is it that you know about the world that's already changed? Like, what is it that you recognize that the world has already changed, that is the part of the story that you need to be telling? Next one is his 4 questions. What do you do? Why is it important? Why are you the person to do it? And how can I help you? Right? Those 4, Matt's 4 question framework. I think it's really powerful because it embodies something that you can actually answer in like 2 to 5 minutes if you really think about what's important there. And then the final thing, and I think this is important, is no learning without failure. So yeah, I mean, I know I personally, I've started more ventures than most of my friends, like and I can't tell you that I can't tell you that that I have been anywhere near as successful as him or some of the other guys. But having a lot of scar tissue, really, it is part of the whole process. And understanding, and one of the things that, you know, even though we have this US centric culture that's a little bit more friendly towards failure, part of the idea of this group, is so that you have advocates for you. We might be countries away from each other, but part of what we can do is by working together, we can actually take on that learning without failure. There's no learning without failure. And the other side of it too is there's guys like me that have a lot of scar tissue that like to donate to you. So, you know, that way you don't have to have as many failures as some of us had. With that, Matt, that was really, you know, I've always been a fan of your work. It's been great to be friends and colleagues for the last 20 years. Thank you for sharing your insight today. We'll definitely invite you into the Facebook group so that you can answer questions, especially over the next couple of days. I'd like to make sure, because we have some people that are actually actively in the Zoom. Kristen was sending me some notes that we also have a lot of people that are watching on Facebook, because we're live streaming into Facebook as well. So we'll make sure we follow up. I think Gerald just asked, can we get the summary information? What we'll do is we're going to take this and we will transcribe it, and then we'll rip the summary portion and post that so that it'll be available to you. The other thing is, if we do not have your email address and you want to make sure that you're on the special invite list about this, we just set this up. We should have set it up weeks ago, but we actually just realized we want to have a special invite to just this group. So if you're interested, you're all welcome. Just make sure that you post your email address either on the chat or make sure that we have it in the Facebook group. Just get your email address to us. Just in case, we'll put you on that MailChimp list, and that will be specifically for this bridging program. But obviously, to have a bridge, you have to have people on both sides of the bridge. And I know, even as an example, some of our Mexican entrepreneurs are here that have now opened up U.S. headquarters. That's perfect too. Just be a part of the whole process. Like I mentioned, we'll have a lot of other events coming up. These are the ones that are actually going to have specific English to Russian translation, simultaneous translation happening, you know, behind the scenes. That being said, all of you are welcome to join into the regular Venture Outfitter calls that meet every Thursday at 11 o'clock Texas time. You're all welcome to. If you have a question about how to get on, or if you don't see the on-ramp, send an email to start@techranch.com. start@techranch.com, and we'll make sure that you actually have access to that. And then on the another event that's going to happen that we'll message through this email list as well, we're going to have a massive, what we call campfire. A campfire is a community building event. I quite literally led tens of thousands of people through this process of connecting people back and forth, saying, hey, who should I talk to about this idea that I have? And those loose connections are really powerful. That's going to be on the 28th of May. It's we'll have an event in the morning at as we see listed here on the slide. But then on top of that, we're going to have something that evening Texas time. It will be, I'm sure we're going to have more than 100 people involved. We'll probably have to bump up our Zoom license to, like, a couple hundred or something like that. It'll be a really great way to experiment about how you can actually create connections across these different areas. Take advantage of that. If you're interested in actually having, saying something even specific, or a company that would like to support that, let us know, because I think it's going to be a banner event to uncover things. But with that, I think we're at taking things to a wrap. Matt, thank you again for today. What we'll do is we'll invite you into the Facebook group, and I'm sure you'll have a few more questions. thank you for sharing your valuable scar tissue and time today. I greatly appreciate it, and glad to have you as a friend, as well as to have your insight for our group.
My pleasure, and I look forward to hearing about what the other folks in this event learn through success or failure. And hopefully we can learn from each other. So I appreciate you all taking your precious time. Like I said, you can get more money, you can't get more time. So I appreciate your investing your time in this, and hopefully it was helpful. And I wish you all best of luck. Like I said, it's a tough time, but tough time can lead to great success.
Yeah, exactly. Well, thank you all. So that's all for today. Good luck with your ventures. Know that we're here to work with you, and we'll see you next time. Take care.
Thank you all.